Hello, I'm Isaac and I'm a junior trader here at Axia Futures in London. Welcome to my desk. Now, today I'm going to take you through order flow. We're going to look at what is order flow and why should you learn it. First question, what is order flow? So order flow is all about the interaction between the participants in the market, and it's the most raw form of information. So when you're watching order flow, you're literally watching the orders come into the market and be executed. This is important because it tells you exactly what's going on in the market right now. Now, if you look at candlesticks and you look at an hourly candlestick, that's telling you what was going on in the market in the last hour. If you look at a 5-minute candlestick, it was telling you what was going on in the market in the last 5 minutes. So the key thing is here that those bits of information are delayed. When you look at the order flow, you're looking at what is going on right now. And if you're a candlestick trader, then that right now is really telling you how did that 5-minute candle get formed? How did that hourly candle get formed? And it makes you a lot more real time in terms of your understanding and a lot more accurate in your trading. So how do we view order flow? Well, we do it in one of two ways, either on the tape or on a price ladder, and I'm going to show you both of those now. Now, if you want to learn more about the price ladder, I've actually made another video of that, so just go through my vlog. Here we're looking at my execution screen. It doesn't usually look quite like this. I don't usually look at the tape because I can see it on the ladder, because I think the ladder is a more rich way to view this information. However, I've included it here just for this demonstration. Now, to the left is the S&P 500 E-mini futures ladder. Then beside that, we've got the 1-minute chart. And then beside that to the right is the tape. Now, the tape basically shows you like timestamped orders. So it shows you a time, a price, and the volume that was traded in that order. And the one at the top is the most recent. So you can see right at the top, there are two highlighted lines. The blue one is a large buy order, greater than 50 lots is how I've defined it here. The red one's a large sell order, larger than 50 lots. So that just like brings those to your attention so you can see the flow into the market. Now, what we're going to look at is two order flow patterns. One is absorption, the other one is stops. And if you just take a look now for the first pattern at how the market's forming a bit of a compression, and we're going to look as the market breaks in that, there is a bit of absorption. Now, the first bit of order flow that we're going to look at is absorption. Now, what we're going to look at is how the market trades as it moves into the 94 and 95 handle. Now, you can see here that the market's bidding up, and you could see some red flash there, you've got some blue and some red, so some large orders are coming in, and you can see this market's trying to move higher. And as it does, and these large orders come in, as you can see again and again some buying, you can see that these buyers aren't being rewarded. So every time they push higher, someone's willing to take those volumes and sell it to them, and that seller's reloading. So that's what absorption looks like. It's like unrewarded effort. The final thing we're going to look at today are stops. Now, what are stops? Stops are orders that get triggered in the market, and so they're forced buying or selling, and they're fast. So the difference between stops and accumulation is that one goes really quickly and it's taking positioning out of the market, whereas accumulation would be like a more steady bid, say, and it's putting positioning into the market, it's creating positioning. So that's just an important distinction. So we're going to look at what stops looks like. So we are looking again at the S&P, and we're going to see it trigger high. If you look at the 1-minute chart, you can see there's that sort of high of congested 1-minute candles, and when the market gets some buying and goes through, you're going to see the stops get triggered, which is going to be right about now. And so you can see it skipped over quite a few prices almost instantly, and that's how you tell a stops move. If you've enjoyed this primer on order flow, you might like the rest of my vlog. It follows me on my day-to-day life here at Axia Futures in London. If you'd like to learn more about the price ladder, I have an episode on that too. All right, happy trading everyone. See you later.